So, good morning, everybody. David Corn here from Academy55. Welcome to all the premium members who are watching this live. Everybody else can watch the recording, of course. Today is a little bit unscripted because I will not be doing any live trading today, but I will be doing some paper trading and doing a bit of back testing, drawing up support and resistance lines, taking you through the red flag news and explaining my decisions why I'm doing live trading like I am for the rest of this week. So without further ado, it's Monday morning, the 1st of April, 10 o'clock. It's a lovely sunny morning down here in Cornwall. Do apologise, my voice is still a bit croaky, still getting over the flu. Getting to the last little bits now, so hopefully it won't be too bad for you. So what we can see here, first of all, we'll have a look at the news and why I came to the decisions I did. So first of all, we are going to look at my Forex funds. I always look at my Forex funds and my FX book for the rest of the week, plot my trading accordingly. And tomorrow we've got 7 p.m. I go through it quickly with one and then go through it because there are a few differences sometimes. So we'll go Tuesday at 7 o'clock in the evening for US 100. And as you can see, that's fine. Wednesday, 7 o'clock. And as you can see, we've got a bit of USD news there, but that's fine. And Thursday at 3 o'clock, we have, and that's all fine as well. But I wanted to draw your attention to this guy here, non-farm payroll. This is the guy that it doesn't how can I put it? The volume and all that stays quiet usually because non-farm payroll usually offsets the apple cart. It can go, I've seen it go as much as 200 pips one way or another within a space of a minute, even quicker than that. in my view, totally untradeable. It's about the banks putting price to where they think it needs to be as beholding this information, whether it be good for the US or bad for the US. And when you think about it logically, it takes $10 million to shift 1 pip. So why would you go and invest millions of dollars into a currency, knowing that at 130 it could go the opposite way to what you hoped it would do? So businesses usually lessen the amount that they invest until such time as this is over, and then they got the clear green light to sort of invest one way or the other. So that really, this one event, don't get me wrong, most of the events do the same, but this one event is a biggie that promotes lack of volume leading up to it. So getting back to today, we have a bank holiday for all of Europe, obviously, and us here in Great Britain. US hasn't got a bank holiday, but the fact that we're mainly doing the euro versus the USD, if they're on holiday, then you can imagine volume pretty low. So that's my Forex Forex factory. So I do the same thing on my FX book, and we'll go down to Monday. Explain Monday. We're not trading today, but usually I try and keep you guys on a regular sort of footing. EUR USD. That's my favorite time at 8 o'clock UK time in the mornings. But as you can see from my list for this week, we're nowhere near that, and that's because we have news one way or another. Like, for example, if I scroll down, we've got Euro news at 8:15, high impact, which could upset the upset the apple cart. Quite a lot of it actually, between 8 and 9, and the whole Euro news at 9. So if we happened to be in a trade just before 9 o'clock, we don't know which way it's going to go because of the high impact news. It might come to nothing. We don't know, but rather to be safe than sorry. So that's Tuesday. So Tuesday morning is out. So that's why we picked 7 p.m. in the evening on the US 100, where things will be a lot freer. And moving on to Wednesday. Again, we got high impact news at 9 o'clock. And so I felt it safer just to do the 7 p.m. in the evening. And moving on to Thursday. Thursday at, where are we? Oh yeah, right, there we go. We got high impact news for France and Germany, and quite a lot of high impact news on Thursday morning as well. So as you can see, that's why it's not very prudent to do 8 till 9 as much as I want to. Obviously trading comes first, the safety of it, being cautious and all that. And Friday, of course, is non-farm payroll. So it was prudent not to trade that day because statistically the volume goes out of the market because for the reasons I said earlier on. Getting onto the charts. Now, this is a perfect example of we're on the EUR USD as of now. All this area here is consolidation. You can see that in hindsight. So really to take a trade, you'd be looking price to break out of consolidation one way or the other to see if we got any meaningful volume or a trend. At the moment, we're in purely sideways sort of territory. I mean, that's not to say, let's have a look and see if there is a trade, although I wouldn't do it myself because of all the consolidation. So here you're getting into a trade, short position, trend line turns red, you'd be sort of going into there. And how many pips away is that? That's 89, 88. Well, we have to be 2 pips away, so I would have gone up to there. And your 2 to 1 would be down there. As you can see, that would have worked out. But you know, it all depends on one's level of caution and how much one wants to trade. I hope nobody here really wants to trade that desperately that they would trade in what's generally perceived as a non volume sort of day because of the euro being on holiday. But as you can see, our indicators work that well that they will oblige and maybe get you into trades. But for me, it's not really a sort of thing I would consider. I'd like to cherry pick what I consider to be better trades, better times of day, etc., etc. But I can see the fact that that would have worked. So let's just go and try this one. Right, so you got green. Now you got the purple line there. So I possibly would have waited for just to creep its head over that purple line. Otherwise, I might be considering bouncing or breaking along that purple line that we see so often. So I'd be going there. This time my stop loss would have to go on the red where it changes to the green, and my 2-to-1 would be up there. And as you can see at the moment, technically we'll still be in the trade, but we're caught in consolidation. And I'd be in the situation of looking at a trade, being in a trade, wishing I was out. I mean, this does happen quite often as well, but why push it and look at days where you've got statistically you've got more chance of being a trending market than days when you've got more chances of being in a consolidatory market. And that's what today is. Statistically, you've got more chance of being in a consolidatory market because of the bank holiday. So anyway, so we'll just remove that. So what we're going to do, I'm going to go on the 4-hourly time frame, and I'm going to look at the bigger picture for the rest of the week. So we'll go on the 4-hourly time frame. Get rid of that a minute. Because what I like to do, the video for this is in the back office, but so I'll get rid of the indicator for the minute. We're on the 4-hourly time frame and see what we can see. This is for points of interest. Like I explained just now, our indicator, the Academy 55 indicator, is a fantastic piece of kit to trust the indicator, and that gets you in and out of trades 61% of the time. What we're doing here now is just giving you a bigger picture of what price could be doing, because if you understand what price can be doing on the higher time frames, it sort of gives you a bit more of a confidence and a bit more of a, rather than going into something blind, gives you a bit more of a knowledge of why price is getting where it is. So first thing is on the 4-hour time frame, I like to put it on the line chart, and this is where we get to draw support and resistance lines. Like, for example, just draw that one. Now there, as you can see, price was wavering, and price was definitely came down to meet that line and shot away again. And also it was wavering around here. So that's a pretty important line. So draw that in. This is on the 4-hourly time frame. And also this line around here, vertical line. We've got a line around there. Oh, sorry, I've got the wrong one. Apologize, remove that. this line around here. As you can see, it was support there and resistance there. So that's fairly an important area the price respects. So we mark that up. If you get one or two more of these little points, two more actually, two more, 1 point we don't bother with, two points. These are just areas of interest to look at that we know price respects. So when you're in a trade and you're coming up to these lines, depending what position you are in the trade and what time, how long you've been in the trade and stuff like that, again, it gives you a bit more of an indication of what you think price is doing. Like for example, down here, that's a important area because it's been support there, but it's been resistance there. So that's a very important area for price to be at. So this is on the 4-hourly. We draw them up on the 4-hourly because they hold a lot more significance the higher the time frame rather than lower time frames. And if you was to do it on a lower time frame, one, they would be less significant support and resistance lines as opposed to the higher ones. And two, they would just clutter your chart up too much, in my opinion. And you want to try and keep your chart as clean as possible. So we'll go back to candles now. And now still on the 4-hourly time frame, I draw up imbalance, support and resistance. And again, this is areas where they're also called fair value gaps. Right, I've got the wrong, that's my consolidation box. So I right click on that one. And I will put it's sell fair value gap. So putting that fair value gap there, where there is no selling on that side. Hang on, let's get this tool. There's no buying power on that side, and there's no buying power on that side. And it was mitigated by this wick here. So that portion of that rather large candle is indeed in balance. And what we know from imbalance, it needs to be filled at some stage. There's no way of knowing when they're going to do that, but we know it's got to be done. And indeed, sometimes they use news events in which to do that. But as you can see, we have a little smidge of little bit of imbalance down here. Get the right tool. Excuse me a minute. There we go. So there's a bit of imbalance here, a tiny amount. And this time, this is buy imbalance. So, because it's buy imbalance, we put a buy FEG on. And as you can see, it's because there is no selling power on this portion of the candle, and there's no selling power on this portion of the candle. That wick there comes there. So this part here and that wick there, that came to mitigate that. So this portion here, which is effectively it's only like 2 pips, but indeed it's got to be filled at some stage. So as you can see now, the EUR USD as an option, it might very well come down and and mitigate that before maybe carrying on up to mitigate that. But there's no time limit. It depends on what's going around and the time of the day. So while we're on this thing, what we'll do is I will now put it back on the minute. You want to equalize your chart. What you do is you put your cursor over there and double left click. Like for example, if I went like that, and then go double left click, it comes back to a sort of normal sort of area. We're on the minute time frame now, and this is what it looks like on the minute. I don't really. We notice these imbalanced areas on the minute, but these are minute, and these could be filled within like 5-10 minutes sort of thing. But again, exactly the same as on the higher time frames. You've got no buying power on that side of the candle, no buying power on that side of the candle. So that is imbalance that needs to be filled. And like I said, that could be filled pretty easy because we're on the minute time frame, and that could be filled within the next 20 minutes or whatever, maybe even quicker than that. But what we'll do now is we'll put the indicator back on, and we can see from our indicator that we have had a slight buy bias, although, like I pointed out earlier on, we are still very much in this consolidation zone. But we have had a technically a buy bias, but as always, well, not as always, but most of the time, we know price loves to hug this purple line. That's why it's here in the first place. It always gravitates, it likes gravitating towards this purple EMA line. But when it's above, it gives you a bit of an idea of what price, what way price is heading. So we've got a bit of a buy bias at the moment. So therefore, if I was taking a sell, I'd want to be waiting for price to go below there. But I would have noted that all this is in consolidation, and also we are in a buy bias. So I might not want to take that sell because it doesn't look so appealing now, knowing that we're in consolidation and price is above for a buy bias situation. So, but you know, so I wouldn't find that sell so appealing. But as we noted earlier on, the Academy55 indicator takes out of 95% of the guesswork for you. We have a mechanical system, red for sell, green for a buy. But this extra knowledge gives you an air of a little bit more confidence, knowing what price is capable of and what price can actually do at any given time. And knowledge is power. So it's not a very good thing that to sort of learn this as an extra sort of little thing in your locker. So that's the EUR USD. So while we're on the rank, let's do the NAS 100 and do this more or less the same thing. So I'm going to get rid of the indicator, and I'm going to go on to the 4-hourly time frame. All right, okay. So what we can see from the 4-hourly time frame is we've got an area of, well, first of all, what we'll do is we'll draw the support and resistance lines. I think that's what we'll do first. So try not to confuse people. So put it onto the line chart. And again, just like EUR USD, this is what I do to work out the most favorable lines where price respects. So here's a beauty, because it was support there, and yet it was resistance there with that point. So that's a fairly important line. Also, we've got these lines here. This is a fairly important area down here. There we go. Resistance, 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 and maybe that line there. As you can see, there's been support there, and it's been support there as well, and indeed resistance there. So that's a fairly important line also. And just one more where we're at the moment. It's been resistance there, and that's where price is at the moment. That's a fairly important line. So we'll keep those lines there on the US 100. And now turning it over to ordinary candles. And as you can see, we have a big swathe of imbalance down here. That's a big swathe of imbalance. I'll get my tool. And as you can see, no selling power on this side of the candle, no selling power on this side of the candle, pure buy. Price loves balance. This wick here mitigated the rest of that. That's why that's not in balance, only this bit here, because the wick came down and this bit here still has to be filled. Try not to confuse too much, but this wick here is, this candle here is next to it, and as you can see, there's no buying power on that side of that wick, so that indeed is in balance. FVG, fair value gap, and also we have similar, if I can get the tool, rectangle. We have similar here as well. So there we go. We got no selling power on this side of the candle and no selling power on that side of the candle. So this is all on the 4 hourly. So that's why that's marked up. So we've got that sorted. So we can then, we've got our support and resistance lines. So we've got a rough idea what's going on with the price. But also another thing, we've got consolidation that I wanted to point out on a 4 hourly. So this is so this area here, we'll get the right tool for that. I get my zoom in the way. If I get my consolidation type block. There we go. This here, this area here in grey is also consolidatory. Price is quite happy to meander along here. So any big movements, So basically, if we were, let's go put it down onto the minute now. Double click, get it right. So as you can see, we're all in grey now because I drew these up on the 4 hourly. So it looks a lot bigger on the minute. I'm sure you can appreciate that. But we know now that this area is a consolidatory area on the minute time frame. But as you can appreciate, if we were to take a buy here, maybe our take profit would be up here. We'd certainly still be eligible for a trade, but we would we'd be thinking that price possibly won't get beyond this line here because of the consolidation that we saw on the higher time frame. So it depends on exactly where you are in a trade. Gives you the knowledge and the power to understand. These are all just points of interest. Gives you the knowledge and the power to understand what trade is, why price is doing what it's doing, and just knowing that gives you added extra confidence in what you're seeing on the charts. A little bit of added extra knowledge, which can't be a bad thing at all. So that is and these will probably last all week. So what we're doing now is I'll go onto there. Move that down there. So yeah, right. Okay, I know what we'll do. We'll do a bit of back testing on the EUR USD. We could go to last Friday, just do one of each, and you can do these in your own if you have a paid account with TradingView. So what you could do is you go, sorry, Zoom's always in the way. So if I get a Zoom and I want to go to last Friday, yeah, last Friday, yeah, we're still trading, even though it was a bank holiday for us here, Good Friday, of course. So we'll go to last Friday at, that was the 29th, and we want to go to 8 o'clock in the morning. That's my favorite time, although I wouldn't have been trading that day because of the bank holiday. 8 o'clock in the morning, press go to, and what I'll do is I'll mark the charts up as the way I normally do. Vertical line. Right, I got the wrong color because I was doing a news event earlier on. Yes, the last time I was live trading, so I want to change that color. So I right click, go down to settings, and change it to white. And you can actually change the dotted lines. You can make it a straight line if you want, but I like to make it a dotted line or dash line even. There we go. So 8 o'clock over to another one, vertical line at 9 o'clock to remind myself I trade in between those two times. So what I could see now as of then is we had a buy alert, but we're underneath the red wave, so I couldn't do nothing. And obviously the red trend line turns green, but the parabolic stars are above the price. I'm also noting that some of the candles are got quite big wicks above and wick, which is indecision. But indeed, the trend line turned green. So going for a long position, you'd get in. Well, that was a sell candle, and it's debatable whether I'd get in there or not, but let's say we did, and stop loss would be there where the red wave meets the green wave, and again, it's very debatable whether I would have actually been taken out of that trade because of this long wick here. And so, but that's where the stop loss would be as per the rules. So I'm going to say that's a loser, really, unfortunately. It's very well, and also with commission, of course, you probably would have by a few tenths of a pip, but a loss is a loss, unfortunately. Yeah, your 2% is there. Rather unfortunate if you were trading at that time, but this is kind of by looking at with a bit of experience, you would see a lot of indecision going on. And sometimes when there is lack of volume in a trade, banks, well, all prices manipulated. I hope you should realize that now, manipulated by the banks and the institutions or whatever. But not only that, they also do what's called a stop hunt, where if there's not much volume going on, they can make their own money because they have algorithms and they can see how much people have got. Let's see if we can do this. Get the right tool. Well, anyway, I should have rehearsed this, but people they know how much equity here, how many dollars or pounds or euros or whatever retail traders, which is us, have got here in readiness for to buy the euro against the US dollar, and they they can actually drag spike down to take it out down these equities areas here before carrying up, and this happens a lot multiple times of the day, especially when we're in an area where there's not much volume around, and also we're more likely to go consolidatory, less of a trend. So unfortunately, we would have been taken out then, but you saw how you actually backtest. We'll do one more. We'll go back the day earlier on the 28th at 8 o'clock. Go there. And we will again put a vertical line. Oh, I think this is the day where we didn't have no trades, isn't it? So rather than do that, yeah, I remember right. Yeah, because we went into consolidation and nothing really happened. So what is that saying? 8:45. I don't know. I'll remove that. Right. Okay. So we'll go back the day before that. We'll go back on Wednesday, the 27th at 8 o'clock in the morning. And let's see what happens here. I forgot. So we go to a vertical line at 8 o'clock, another vertical line at 9 o'clock. And so what do we see here? Again, consolidation along here, big time at 8 o'clock. Not much going on. But we have a buy alert at 8:45, but it's going along that purple line. And as I always say, price loves that purple line, and we can get a situation where it can bounce along there for, I don't know how long, before actually maybe coming back down again. So you would be wary of that. But as you can see, it poked its head up above this area here. So you could be getting in there because we're now in a sort of buy trend bias. So you get on that candle there. Stop loss would be at the trend line because where the wave starts to turn green is down there, but the trend line is down there, and that's closer to the entry. So your 2-to-1 would be up there. And there we go. That is a successful trade on last Wednesday by having a little bit of knowledge of what price is doing and where price is going. Gives you a little bit more of a confidence. But the Academy 55 indicator is really cool. I mean, back tested it extensively over last year, and really it's one of the best bits of kit I've ever come across, and also will keep you in 96, 97, 98% of the time. It'll tell you right, but with the extra knowledge you get from the support and resistance lines and the imbalance points of interest, gives you a little bit more of a confidence in why you think price is doing what it's doing. The longer you do this and see price heading towards areas of interest that we pointed out, and you get to know a little bit more about price, the more confidence you get, and also looking at the journals as well, and back testing, all of it coming together, you'll gain your experience massively, and you'll do all right. So the next time we meet will be on Tuesday, the 2nd of April, 6:55, doing the US 100, because of all the news, because we got a bit more of a thing at the moment, because we are at the start of a lot of people's financial year. So we got all that happening this month, this week as well, where budgets are being sought. People are doing their last year's tax, especially in America and stuff like that. So this week is could be a bit dodgy, could be, it might not be, I don't know. Nobody knows for certain, but what we've seen in the past could lead you to believe that. And of course we got non-farm payroll on Friday, so we must be very careful and more diligent, though we are anyway. So So with all that being said, I shall see you tomorrow night, 6:55. Come back to Academy 55 for the link, and I'll see you tomorrow night. And we'll do some live trading. So keep watching the videos in your back office, and we'll see you tomorrow. Thanks very much. Cheers for now. Bye.